The concept of free money, or Modern Monetary Theory MMT for short, continues to grow in popularity among mainstream economists, politicians and the mainstream media. On the face of it, free money sounds great, but is MMT gold's best friend or its worst enemy? Today we explore this relationship and take Jim Rickards' perspective on MMT, so let's dive on in. Now, this channel provides global macro insights and champions the concept of sound money, so do consider subscribing. Now, MMT purports to offer us a way we can actually solve the key issues of unemployment and underemployment, while simultaneously tackling any social issue, given that currency creation and government spending faces only the constraint of higher inflation. Traditionally, the tax revenues of the government have always and rather obviously been seen as the constraint for government spending. Instead, MMT has perceived the level of inflation to be the primary constraint upon government spending. So instead of money being lent into existence, as we currently have our system, now it can be spent into existence. The principle really requires the central bank and the Treasury to act as one. Where in the US, Treasury spending would reduce the government's bank account at the Fed, but this would increase private sector bank accounts of citizens or companies who are the recipients of their spending. So there is the principle in a nutshell, that Treasury spending equals money creation and increased private sector wealth. Meanwhile, the alleged deficit myth is highlighted by the relative infrequency of financial crises originating from the public sector, where proponents point to the infrequency of public sector generated financial crisis in comparison to those caused by the private banking sector. Thus, any social issue can be tackled, whether it's resolving, in Rickards' eyes, the mountains of student loan debt impeding household formation and turning millennials into debt slaves, which can be remedied with debt forgiveness, while unemployment can be cured with a universal basic income sent to every citizen with no strings attached. Of course, such initiatives and mass fiscal profligacy will see fiscal deficits gap ever wider, while national debts would continue to soar. This will require ever-increasing issuance of treasury bills to finance this deficit. Such analysis relies upon the fact that the Fed and other central bank balance sheets have no legal limit. Thus, the Fed and other central banks can be used to facilitate straight-out deficit financing or debt monetization, if you prefer. The upshot is that under MMT, the Fed and others will need to adopt a policy of yield curve control. This is where the central bank targets a longer-term interest rate, which is accomplished through the buying or selling of bonds as necessary to achieve this interest rate target. Under MMT, national debts will grow ever larger. Consequently, increased borrowing costs could not possibly be tolerated. And so MMT sees money as a highly elastic concept, a concept which sees currency as a means by which they can be stretched to ever increasing quantities. Now, in a moment, we'll consider Jim Rickards' perspective on the darker side of MMT, but first let's consider what we are now clear on with regards to precious metals. First, that under MMT we would see outright currency debasement, a scenario so incredibly positive for the future value of gold and silver. Second, widening fiscal deficits and rising national debts. Again, enormously positive for these metals. Third, yield curve control, or the suppression of longer term interest rates. For an asset producing zero yields, such as gold and silver, this is again a big positive, clearly showing MMT to be a big friend of gold and silver. Fourth, of course, gold is highly inelastic in nature, the very reason it has become so loathed by our authorities. And so what about MMT's darker side? Well, according to Jim, while the concept purports to be a new 21st century approach to solving the problems of government finance and economic growth, it's simply old wine in new bottles. Its fundamental principle is that of chartalism, which defines money as a creation of the government that derives its value from its status as legal tender. It is directly opposed to the economic theory of money, which argues that money originally derives its value from its usefulness as a medium of exchange. Consequently, the government can force a monetary demand upon its citizens, given that taxes are mandatory and are enforced by fines and imprisonment for non-payment. So according to MMT, it is this status as proclaimed legal tender which makes a form of money valuable. As Kelton has stated, that money is a creature of the state. Consequently, as Rickards points out in his book Aftermath, that Kelton believes that gold was not money due to its scarcity or utility, but because the state proclaimed it to be money. He cites Kelton as stating that only the state, through its power to make and enforce tax laws, can issue promises that its constituents must accept if they are to avoid penalties. Indeed, state power is the root of state money. Thus, Jim identifies the key means of controlling inflation in a world of MMT and suppressed interest rates, that high tax rates must be used to control any price growth. He states if money's value is derived from it being the accepted means of payment for taxes, then higher tax rates make money more valuable because citizens need more of it to avoid prison. When money gains value, the effect on prices is deflationary. Given gold's proclaimed status as the money of the free, here we can clearly see that the notion of MMT and its key principle of chartalism goes against the very nature of gold. Thus, Rickards sees MMT as a neo-fascist concept, and a world of MMT is likely to go after any potential competitors to their infinite paper or digital promises. But there's more, as Rickards points out that MMT ignores not whether there is a legal or inflationary limit on money creation, but whether there is in fact a psychological limit to the creation of fiat currency. He highlights that the real source of money status is not through state power, but its confidence. After all, if two parties agree upon a means of exchange which is recognized as such by others, then that medium can be considered money. As we all know, that confidence is fragile, easily lost and impossible to regain. But in addition, MMT's other blind spot is the velocity of circulation. While this continues to fall, velocity can be a little like trying to get toothpaste back in the tube. Once the secret's out, it's very difficult to turn the situation around. Without question, the biggest concern that I have with regard to MMT is that it further centralizes power. That further centralization of power can then be administered as authorities deem necessary. So it's interesting to note, on one hand, that gold, silver and those cryptocurrencies are likely to actually trade very positively against the notions of MMT, but they are the complete enemy of the state-run system, of course. So there we have it, money for nothing and your checks for free. What do you think? I'd love to hear your thoughts on this. Do let me know. Here's our summary for today. Now do make sure you check out these other videos here, and I'll look forward to seeing you next time.